I have a 4,000 target on gold. I think that's what we're probably going to see this year. My target on silver is 75. We could see that by the end of this year. Yeah, last April, obviously, when the tariffs were announced, they surprised the market in terms of how large they were and what Trump was in a negotiating pattern at that point. The market took it at face value, and so this is going to tank the economy. This is going to tank the markets. And most strategists on the street, most market analysts turned bearish at that point. You started hearing the top is in. We aren't going back to the top. We're heading for 4,000. We're heading for 3,000. This is the bear market. And right under, at 4,900, 5,000 is when I raised my target from 7,500 to 8,000 on the S&P and raised the other indexes. I think I raised the NASDAQ from 23 to 25 at that time, or 25 to 27. But my thing was that everybody got so bearish so fast. Sentiment was actually back to levels in 2020, at the lows in 2020. What I saw there was that we rebuilt the wall of worry in a very short time, in a matter of a couple of weeks. And everybody was on the wrong side, and I got more bullish in my typical contrarian approach. So, I think we basically rebuilt the wall of worry. That wall of worry is the fuel for this final leg. And even up, 30% off the lows, you have a good deal of skepticism. People say, well, that's fine. We had another run, but they thought it was going to be a double top. It blew through that, which I said it probably would. And now they're looking and saying, gee, I don't know what to do. But they certainly aren't bullish. They are, some are kind of coming on board and going with the momentum a little bit, but there's still a lot holding back, saying, I want to pull back. Yes, maybe this thing has more to go, but I want to pull back. And that's, I've been saying we could see a pullback from, say, 6,500 on the S&P, but it's not a given. I mean, those short-term scenarios may or may not work out. And, given the skepticism that's still in there, you saw the reaction yesterday to the Fed. This thing may just kind of keep rotating and feeding on itself, so that you could get a pullback back to the breakout, which was 6,100 area on the S&P, which would be 6 or 7%, maybe 5, 6, 7% pullback. That would cause a lot of people to get bearish again. I think even that little pullback, given how far we've come, could cause people to say, oh my God, we may have seen the highs. And that would just be, again, we'd be rebuilding that wall of worry, providing more fuel for the future. Or we could just see that this thing is kind of in a rotating correction where, different groups kind of correct. For instance, small caps, which started to go, have pulled back again here. So it remains to be seen. I don't have a crystal ball to tell you whether we'll get a pullback or whether we were kind of getting a sideways consolidation in here. But either way, I think the next few months is up. You could have a 2 or 3 week pullback, or you may not. I remain bullish on both gold and silver. Gold actually has done a nice job of consolidating since April. Basically a 3.5 month consolidation here. At a high level, between 3,200 and 3,400, 3,500, I guess. At the present time is more in the lower end of that consolidation. I don't think there's much downside here, if any. And I think basically you'll have another leg up here. I have a 4,000 target on gold. I can't remember exactly when I raised it, but since I talked to you last, I think I raised it from 3,400 to 4,000. And I think that's what we're probably going to see this year. So sometime between now and the end of the year, you should get up to that. Silver's a little more volatile, as we know, and scares people out oftentimes because of the volatility. It ran to $39 and look like it will, my I think my next resistance level is the mid 40s, 44, 45, and not sure what it does there, whether it has a bigger pullback or kind of, very short term stalls out and pushes through there. My target on silver is 75. We could see that by the end of this year or certainly early next year. And yeah, I don't view this sell-off as violent as it may seem to some, that we've come back from 39 down to 36 and change. A month ago, back in early June, silver was down in the 33 and a half area, 33 and a quarter area. So we're at the end of the month. It's the last day of the month. It's not unusual for these metals to fill in, and actually other markets too. So people have to be careful not to react to day-to-day stuff. If your low last month was 33 and a quarter and you're at 36 and change now, and your high last month was lower than the high today, you're still putting in higher lows, higher highs. And I think August will probably be another bullish month. So, silver looks great to me. I think the miners are finally, although they are again volatile and cause people to get nervous, they're in uptrends that will continue. And my targets for silver are SIL, which is large silver miners, to 75. I think that's on track. And SILJ to 35. Which is a long way from here, but I think you could see that this year. So on gold, GDX, I raised my target, had been for a long time 65. I've raised that to 75, and my GDXJ, which is junior miners, remains at 100. It's a very clear target there that I think we can get there a little above that. So I'm very constructive on both the metals and the miners.